Alrighty. Well, welcome back to another episode of Bound by Banking. I'm your host today, Ryan Young, and today we are joined by Micah Bartlett. Welcome, Micah. How are you doing today?
I'm doing fantastic, Ryan. Thanks for having me.
Of course, of course. I'm excited to be talking with you today. Kind of learn from your experience. I hear you got quite a bit. So why don't you tell us a little bit more about your experience in the banking industry and where you come from?
I'd be glad to. So I'm actually semi-retired right now, but that was following a 33-year career in community banking. The most recent was my 16 years at Town and Country Bank in Springfield, which was a community bank, a little under 1 billion in assets, and I was a CEO there for 16 years and had a great time. And prior to that, had been a CFO, but started actually as a teller and kind of did a little bit of everything in banking over those 33 years. So it was a nice run. Had a great time. I retired in 23 after we sold Town and Country Bank, and but I'm still engaged in the industry a bit. So I'm on the board of a community bank now. And then I also serve as a strategic advisor to banks and other companies and really working to help organizations, not only with an approach to strategic planning, but kind of going beyond that and helping leadership teams with a program to help them actually bring their visions to reality. So not just having plans, but really having a set of tools and processes around which the leadership team kind of prioritizes aspects of their strategic plan and gets things done. So I'm having a lot of fun working with some organizations, just really helping them establish clear visions and actually getting the traction and the discipline to implement what they want to. So having a lot of fun with all that.
That's awesome. That's awesome. What a cool story to start as a teller and work your way up to CEO for 16 years, and now taking all of those years of experience and all that knowledge and put it to good use in your semi-retirement. So that's cool.
Thank you. No, it's been great and a lot of great experiences. Obviously, banking's changed quite a bit over that time. As everybody knows, there's a lot of things that are the same. There's a lot of things that are
Yep.
different, and but it's really great to be part of this kind of wider community and sharing ideas with folks. And I think we all kind of contribute and grow from being around other smart bankers.
Absolutely. I think you're absolutely right there, being around smart bankers. That's what it's all about. So very cool, Michael. Well, if you're ready, we'll hop right into it. I've got some questions prepared for you that I'd love to hear your thoughts on. So why don't we go ahead and get going? So I guess the first question I have for you is when you think about growth right now in the banking industry, what are some of the biggest constraints that they're facing? What do you feel like there?
Yeah, and most of my perspective, of course, comes from the community banking space, obviously. And I think that when you talk to most community bankers, they always want more loans, right? You want
Yep.
to grow that side of the business. That's a key revenue generator. And in years past, many years past, banks could still have decent profitability without having a high loan to deposit ratio. But as things have kind of evolved over many years and margins have shrunk and things like that, it's harder to do that without a good lending portfolio. So I think that in the short run, that's always an issue. Is, hey, how do we generate more demand? How do we get more businesses and consumers to want to borrow from us? And so that's always there. But actually, for me, I feel like the longer term constraint and issue that community banks are going to have for their growth is actually their long-term core funding, really looking at the deposit
Mm,
side of the
okay.
business. So, if you think about, just at the big picture, what is it that makes banks different? Well, anybody can loan money, right?
Yeah.
But, banks, we have this unique role. We have this, quite frankly, this unique advantage with being able to offer FDIC insurance on deposits, right? So banks have this unique position in the marketplace to offer, safe and secure deposits. And so I feel like the long-term deposit strategies of banks is something that actually I perceive a lot of risk in the future. And so, where does that perspective come from? Well, I think first of all, we're all talking about digital currency. We're all talking about cryptocurrency. We're all talking about stable coins, things like that. And so everybody understands that as an issue. I think I read recently where as much as 15% of US households have actually invested in some form of, cryptocurrency, for example. I think the market cap it's changing every day. And as you know, there's been a bit of a correction there
Yep.
recently, but I think it's, at least $2 trillion of market cap. Some of that is value that's just been created in kind of the speculative price of cryptos, but then there's also a lot of that that's real deposits that have left the banking system and been invested in,
Yep.
alternative stores of value, right? And so where's all that going? How's the Fed going to finally deal with, digital currency? And as kind of an aside, there was a study that the FDIC conducted a few years ago, and they really wanted to understand, like, where does community banks in particular, what role do they play kind of in the broader scheme of bank deposits and lending? And one of the things that they found was that while community banks only controlled maybe, let's say, 10% of the deposit base, they actually accounted for maybe 40% of small business lending. So the role that community banks played
Mm.
in deposit gathering versus small business lending was at 4x, right?
Yeah.
They were outstripping their own market share there. And so that's one of the issues that government officials have is, hey, we have to move forward with digital currencies and things like that, but in a way that doesn't remove this deposit base from community banks, who are kind of the lifeblood of small business lending. So, dealing with all of that, and I think, and my real point though is that what banks have really got to do is think about, okay, given these trends, now what? What do we do
Yeah.
about that in terms of how we fund our balance sheet? So that's kind of number one, is just the role of digital currency. And then secondly, I have a growing concern also about the level of rate sensitivity that we'll see in the future with deposit customers and their preferences. So, in an age where information is ubiquitous and the ease of doing transactions is far, easier, right? So I can see what rates are out there and I can quickly move money anywhere that I want to. A lot of the profit margin and net interest margin in banking is from having a low cost funding source, low
Mm-hmm.
cost deposits. Well, to be very frank, is how long can a bank, pay very low rates of interest on deposits if those depositors have information and alternatives that are
Yeah.
easier and pay better, right? And so I have a fear that is going to be a growing influence, and it's going to be harder and harder, for banks to take advantage of that relationship value versus other rates being paid. And then that really goes along with my third point is just the kind of the wealth transfer as we're moving from generation to
Yep.
generation, how that
Yep.
fits in with the previous two items. So I think the biggest constraint in the long run is going to be, can a community bank grow its balance sheet and grow its revenue in that traditional source of taking deposits and making loans, given that there is a lot of risk on that liability, funding side of the balance sheet. So that's one of my concerns, and of course, I've got a few thoughts about, what therefore should banks do
Yeah.
given that risk out there.
Yeah. No, in very, very good, valid point there. I think one of the things that stood out to me is you mentioned that, talking about the digital currency. I've never really thought about that, but yeah, people are pulling those deposit accounts and those amounts out of their bank, put them into digital currency, and that's going to affect, like you said, the small business lending and other different things like that. And so, it's something that you've got to keep in the back of your head of, okay, how can we keep the deposit accounts here and keep them funded for other uses and other loans. So
Yeah, no, that's right. And so I think, what I really think, and every bank's got to make this make sense for their own business model, but, some kind of big picture strategies, I really feel like, first of all, we've got to make sure in community banks that we have really good, deep, sophisticated relationship strategies, right? And
hmm
so
hmm
whether that's really segmenting our customer base more and really understanding, what are their behaviors and what are their needs, who's rate sensitive, who's not rate sensitive, really having a deeper understanding of what our customers are looking for so that we can then tailor both our relationship management tactics and our product tactics and our marketing tactics to those needs. And so, the more we understand, customers and their needs, we can almost have like personalized retention strategies, right? And really go deeper with all that. So I think first of all, it's really spending a lot more time segmenting and analyzing our customer base, given these macro trends, so that then our relationship strategies, pricing strategies, product strategies, all those things can be better informed. Secondly, I think we just have to kind of look at a very pragmatic way and say, hey, how are we funding our balance
Yep.
sheet? How much of it is
Yep.
really core deposits? How much of it is non-core? What about alternative funding sources? And, one of the things that we've seen over time, as there's less and less, CDs maybe as a source of funding for banks, there's a lot of bank deposit base that is, liquid accounts, liquid type deposit accounts. And
Mm-hmm.
so, do we need to be thinking differently about how do we introduce other term structures onto our balance sheet so that, we can have a little bit more, kind of a longer term certainty of our funding levels and things like that. So just looking even at wholesale sources and things like that. But then I guess my bigger point then is, so those first 2 points, really having better relationship management strategies, really looking at the mix and type of deposits that you're funding your balance sheet with. Those are to keep that deposit engine going so that we can keep funding this traditional
Yep.
business model of taking deposits and making loans. At the same time, I really think that community banks are going to have to do a lot more to look at alternative business models. So how else can we generate revenue, provide financial services to our, communities, our constituents, but maybe in a way that de-emphasizes the balance sheet. So that's really something that, we started doing at the bank where I was CEO. Was, we saw these kind of long-term trends, and we realized our growth was always going to be limited by our ability to, have deposit growth, long-term
Mm-hmm.
funding, and then also capital, just the
Yep.
capital to support the balance sheet. And so one of our big strategic themes was, okay, let's find ways to grow our business that where we're growing revenue that is not balance sheet related. And so
Good point.
that's really something that I think banks need to focus on. Now, for decades, we've talked about growing the fee side of the business and fee-based businesses, but I really think for a lot of banks, they've got to broaden that even a bit more. And it's not just about getting fees out of these kind of sort of things we're already doing, but can we shift to the entire business model? What does lending look like when it's not our loan on our balance sheet,
Yeah.
right? What are the
Yeah.
other services that we can provide? And there's, kind of obvious things that can be done there. And then there's things that are maybe more innovative that can be done there. And so, I'm very positive and very optimistic about banking if banks are able to kind of innovate and think of these new business models and new delivery mechanisms to do what we do. But for a bank who's very reliant on their balance sheet to grow and improve their situation, I'm a little more skeptical there in the long run.
Gotcha. Okay. No, those are some really, really valid points, and certainly good things to kind of think about. So very cool. Love the answer. So, all right. So, second question I have for you. This is going to be a little bit more marketing related for you, but where do you think that banks tend to overcomplicate the marketing, and then kind of the opposite of that? Where do you think they oversimplify it?
Well, Ryan, as a marketing expert like you are, I have to start by saying, I took a marketing class in college, so that means, of course,
That's
I'm a marketing expert,
an
right?
expert of it. Yes.
Everybody,
Yes.
everybody's a marketing expert, right? No, and that's one of the things I've always been clear about, and why it's so important to have, really talented marketing experts in your organization, because it is one of those fields where, more so than other areas in banking, everybody has an opinion, everybody thinks they know what works, right? But the real point is you've got to be very strategic with marketing. And so in some ways, I guess my answer to, how we overcomplicate and oversimplify, it's kind of two sides of the same coin, I would say. So I think for, overcomplication, I think, and again, my perspective is coming from community banks. I think it's this kind of all things to all people, almost in all ways, right? So it's too many messages, too many audiences, and too many mediums in which that we're,
Yeah.
we're sharing this, right? And so it complicates. It complicates our message. It complicates what it is that we're trying to accomplish from a marketing perspective. And so, I really feel like because some banks are not as strategic as they need to be in their marketing, they make the whole approach to marketing overcomplicated by doing, quite frankly, too many things in too many
Yep.
ways.
Yep.
And for example, even just in messaging, right? I mean, there's a lot of messaging that just gets really watered down because, hey, we all like to talk about our customer experience and our service and things like that, but we also know that everybody talks about that, right? And so if you're not able to do that in a way that's compelling or meaningful or truly differentiated, it's probably a message that's getting lost, right? So wouldn't it be better to simplify and say, like, here's
Hmm.
really our thing, this is really our
Yeah.
thing, and let's really emphasize that and hammer that in everything that we do, right? And don't overcomplicate our message with too many factors that just aren't going to resonate and aren't going to land with our constituents.
Yeah. And I think that kind of, although billboards are, whether they're still worth it or not, the one thing I will give billboards is the quick messaging of, like, because realistically, you got to think people are driving down the road. You have a couple seconds to get your message across, and so you had to keep it very short and sweet. And I still try to kind of keep that same mindset for a lot of the marketing things of, like, how can we quickly grab their attention and make that retention of, like, where they're remembering us, hours or days later. And so I think if you can kind of bring that into the marketing world of simplify it, finding your niche, and just making sure that you're the expert. Yeah, I mean, I feel like at that point everything else just kind of falls into place. So
Yeah, no, that's great. And it kind of leads to the second half of your question, how do banks oversimplify? And again, I think it's two sides of the same coin. So I still see a lot of banks, doing just kind of a lot of random advertising,
yep,
and one of my pet peeves is when people, use the word marketing and advertising in the same context, which is
yeah,
unfortunately still out there today,
thank
right?
you.
Yes.
We get
And
it.
so, I just see a lot of advertising and promotional activities where banks are, I mean, and it's, hey, we've got to have these newspaper ads because we always had, and we've got to be on the TV, and we've got to be on the radio, and we've got to do these sponsorships, and we've got to do these events and all these things that we've done. And again, it's a simplified approach. It's just this
Yeah,
scattershot of doing all this stuff, right? As opposed to really focusing in, okay, what are the engines of growth in our bank? What are we really good at? What is our core message that we're trying to share? And then do we have a strategic marketing plan that manages that channel all the way through, all the way into how the customer interacts with us at all those points? Do we have post acquisition, follow up, really integrating all of these tactics into an overall process that we have for customer engagement, as opposed to just taking out advertisements and thinking, hey, our name's out there, so that's all we need to do. So my answer with a lot of things is comes down to the word focus, right? And so how do you really focus your business? How do you get your folks inside the company really understanding what is our core focus, and then how do you
yeah,
translate that into marketing strategies and tactics?
yeah. No, I agree, and I think having those strategic meetings and decisions process every few years is good because, in my opinion, one of the easiest way to kill a business is just by a simple mentality of we've always done it this way, so let's keep doing it that way. Like, no, you've got to have those innovations, you got to have those new things that are being brought into it, and especially in a data-driven world like we are now, like ROI reporting. I mean, that should be a main factor, part of the decision process of, like, is this marketing or is this advertising working? Is it worth the investment? Are we seeing an ROI from it? If not, then kind of begs the bigger question of why are we still doing it? So,
No, that's great. And I think that's a real challenge for a lot of banks. Everybody, I think intuitively understands the need for like an ROI measurement, right? But
yeah,
I think as bankers, we're so exact about, 1 + 1 always equals 2. And so we look for these exact ways to determine ROI. And my advice to bankers is it's okay for that not to be a formula. I
yeah,
mean, it's okay to let that be anecdotal and directional and look at trends and things like that, because it's not an exact science, but the more we try to make it that way, I think is good, to really use data, find the data any way you can, link it to your results any way you can. But even if it's not exact, and even if it's not as tight of an ROI formula, don't let that stop you from doing it.
Oh yeah.
Find ways to let that data speak to you, even if it's not as tight as you want it to be.
Yeah, absolutely. So very good points there. All right, Mike, I got the last question here for you. So you ready for it?
I'm ready. I'm
All
ready.
right, cool. So you've obviously got a lot of experience working with banks and helping them grow and things like that, and obviously leading the helm. What advice would you give to other banks who are trying to grow, but to do that without burning themselves out? Because I feel like a lot of times people there at the bank, they get so focused on growth and, the day-to-day aspects that, you look up 6, 12 months later and you're like, man, I'm exhausted, I'm tired, like I feel like I haven't had a vacation. So how do you find that balance?
No, it's a great question, and obviously we all understand that, we want to grow, and yet there's all these other things that we do in
Yep.
banking. There's all this regulatory and compliance and all these other things that we need to do to run a good bank, right? And so in addition to all these day-to-day jobs, we want to grow too, right? How can you just humanly do all that, right? And so the two words I want to talk about are focus and do less. One of the most simple
Yep.
ways to help yourself if you're burnt out is do less, right? But that requires
Yep.
focus, right? So here's kind of a quick analogy for you, that I like to use. So the sun up there in the sky, right? The sun gives off every day billions of kilowatts of energy, right?
Yep.
Billions of kilowatts. And yet, when we go outside and stand under the sun, the worst that happens is maybe if we're out there too long, we'll get a sunburn,
Yeah.
right? But a laser beam only gives off a few kilowatts of energy. But if it's focused at one spot, it can literally cut through steel and
Hmm.
cut through diamonds. Okay.
Yeah.
And so that's the analogy that I like to use with the power of focus. If you focus that energy in, then you can be highly effective. And I think, unfortunately, a lot of banks, good intentions, but they're a little bit more like the sun than they are the laser, right? And they're putting a lot of energy into a lot of different things. And so you don't get the results you want and you kind of burn out. And so, the real point there is we've got to be focused and we've got to do less. So this doesn't have to be complicated, but I think that a lot of banks really need the courage to go in and say, we're actually going to go through a vision exercise and we are going to establish a written core focus. This is what this bank is focused on, and it's not going to be all things to all people, and it's not going to be deliver the best service of any bank up and down the street. It's going to be looking at what is it that we're already successful at. What is it that the data is showing us? We are growing. We're having success in these areas, and we know we do these things well, and then do more of that and de-emphasize. So at the bank where I was CEO, very simple, but we went through this process and we said, okay, we're really good at commercial banking relationship management, and we also had a really good mortgage lending platform.
Hmm.
And yet, when we did that, we had other lines of business too. We had a whole consumer line of business. We had a trust and wealth management line of business. But we went through that painful process. And Ryan, this is so easy to say, but it's so hard to actually do in
Yeah.
your business. So once you declare that and you say, this is our focus, then that becomes a very powerful filter for what you will do and what you will not do. And so now, new people, new resources, new strategies, all based on the core focus, which means that the things that you do that you still may do because we're a community bank, we still may do them, but they're not going to get, the biggest of our resources. And we may automate, we may simplify our products. So for example, at my bank, you know, making automobile and consumer loans was not part of our core focus. So we simplified all of our product sets there. We came up with automated ways to underwrite and make those decisions so that we could quickly do that stuff and not bog down our people with working on those types of things. And then in our areas that we were focused upon, we created more resources, we developed out our products, and then for example, okay, we're really focused on commercial relationship banking. That also means there were certain types of commercial lending we de-emphasized because we really
Yep.
wanted the true relationship type of lending. But then also maybe in our trust and wealth management business, we also started to tailor our products there to really align with our business customers then, as opposed to them kind of off doing their own thing, right? And so this idea of how determining a core focus based on what you're already good at and where you see opportunities in your market, and then having the courage to make tangible decisions about, we're going to do more of these things and we're going to do less of these things. That's, in my opinion, how you can control that burnout a little bit, right? Is by doing less of the things that are not part of your core focus.
Focus and do less. I think that is a great not only business analogy, but life analogy as well. I feel like that can also be taken into a lot of personal things, outside of the kind of your working space. And I love the analogy you used there about kind of the sun and the laser of just taking all of that and focusing on one certain thing. And the human brain can only handle so much task juggling at full capacity and full brain power, to where at certain points you're starting to do things halfway, and that's when you start making mistakes and you're not given the full potential. So I like that, focus and do less. It's a good one.
That's great. Good words to live by, right?
There you go, very cool. All right, Michael, well, thank you so much for joining us today. It was an absolute pleasure learning from you. Loved hearing your insight on all the questions. So once again, appreciate joining and hope you have a wonderful day. And I'm sure we'll be staying in touch, Micah.
Yeah, that's great, Ryan. I appreciated getting to chat with you a bit. And I'm kind of a banking geek, so I love talking about this stuff. And I wish all my colleagues out there continued success as well.
Awesome. Very cool.